Good morning, bonjour, Annie. My name is Kimberly Mohammed Ashane, and I'm the Operations and Events Manager with Northern Ontario Angels. Welcome to the Investor Ready program, Investor Insights. We will begin this Investor Ready program by acknowledging that we are meeting virtually on Indigenous lands that has been inhabited by Indigenous peoples. We acknowledge all of the treaties and traditional territories on which all of you in attendance gather today. If you've not already done so, please mute your audio and video channels, and following the presentation, you can unmute and ask questions in the chat. The Investor Ready program is a partnership between Northern Ontario Angels, the Business Centre, IION, and the City of North Bay Economic Development Department. This program is a comprehensive entrepreneurial training program designed to equip you with the skills, knowledge, and tools required to create compelling business propositions and attract potential investors. Now I'll pass it over to Ian Lane, our Executive Director at Northern Ontario Angels, to introduce our presenters today.
Awesome. Thanks, Kimberly. And yeah, I have the privilege of introducing some great friends of Northern Ontario Angels, and we'll just be doing a bit of a fireside chat here. I'll walk them through some questions. They'll guide me as much as I guide them. And like Kimberly said at the end, please put your questions in the chat, and we'll leave some time for some questions. But the whole goal of this is to introduce folks or demystify the angel investing process, and we've got two fantastic champions for angel investing in Northern Ontario here. So my first guest is a colleague, Chad Pallopson, who has over 20 years of investment banking experience at some of Wall Street's largest firms, including JP Morgan, Lazard, and Goldman Sachs. He's also been a managing partner and portfolio manager at a Connecticut-based long-short equity hedge fund. Originally from Aurelia, he now resides in Parry Sound. He has a degree from the Wharton School of University of Pennsylvania in Philadelphia, and he most recently became Director of Business Development and Investments, where he is guiding Ontario Centre of Innovation's direct investment programs, such as the Life Sciences Fund and the Ready for Market Fund. And Chad is also one of our representatives through the Northern Ontario Angels in the Parry Sound and Muskoka area. Our other guest is Peyvand Melati. He's a highly accomplished entrepreneur and angel investor who has successfully launched multiple businesses. He is an expert in the commercialization and growth of companies in major industries with a focus on AI, IoT, clean tech, and medtech. Peyvand is the founder and CEO of QEA Tech, an AI-driven sustainability company that uses drones to gather comprehensive thermography, quantification, and energy audit service for buildings infrastructures. He is an electrical engineer and holds an MBA from the Kellogg School of Management and from the Schulich School of Business. So, gentlemen, thanks for joining us, and appreciate you taking the time to transfer some of your experiences as angel investors. And I'm going to start off with a question to Chad. Given your bio, with your experience being in Wall Street, being an investment banker, doing some large acquisitions, what compelled you to get into the very early part of growing and scaling businesses with angel investings, and what kind of adjustments have you had to make as shifting that early part of the continuum from the latter part?
Yeah, I had a lot of experience, especially when I worked at the hedge fund and investing in public companies, trading public companies, advising public companies, in sort of the largest of the large, mid-size and small cap. But this is a whole different stage of investing. And I first got interested when I moved back to Canada in late 2019. And it was actually through NOA, through NORCAT. I had found those organizations because I wanted to, I guess I'll put it this way, when you buy a stock on the New York Stock Exchange, maybe depending on the company's business, but I don't think you really feel like you're making an impact to your community or to really, I wanted to find a way of investing, putting what I had learned over a 20-year career, but at the same time make some sort of impact to my community. And NOA kind of fit that pretty well with investing in Northern Ontario-based companies. And I think over time, it's just expanded through Axion, through connections like Peyvand, to sort of a really just a Canada-based strategy. So adjustments I had to make, I think I think the biggest adjustment moving from big to small is financials. At the really early stage, there really aren't any. So there's not a whole lot of numbers that you can get your arms around and say this is worth that. And the intrinsic value are sometimes they're just, it's harder to get your hands around because there are no numbers. It's more of a evaluating the idea, the founders, the market size. And so I think that not having financial statements that you can dig into was probably the biggest adjustment for me.
Great. Yeah, thanks, Chad. Peyvand, I'll turn that same question over to you, and wondering, I'm sure there's a little bit of your entrepreneurial experience maybe attracted angel investing that introduced you to this world, but I'd love to hear your story of how you got into this realm.
Absolutely. So I've been an entrepreneur all my life, and opposite side of the spectrum from Chad, where Chad was. Basically, I've grown companies and I've had exits before. After my second exit, I wanted to get back and give back to the community and entrepreneurs, and that's inspired me to start from the early stage companies, and didn't know anything about angel investment. My first exposure was around 2017 when I started getting involved with angel groups like G10, New York Angels, and other angel groups. And the part that was surprising or challenging for me was, and I didn't have the experience on the early stage risk in understanding the entrepreneurs and the team. That was quite interesting for me. As Chad mentioned, there's not a lot of numbers to work with, and understanding if the team has the grit and has the what it takes to take the company to the next level was challenging for me. And I learned the hard way that if I want to cut checks myself, it might be hard, and you might bear a lot of risk. So I joined the groups like Northern Angels, basic group angel groups, or eventually we created our own fund, just to structure and have a better way of dealing with early stage companies.
Great. Thank you. So I'm going to pick up on an element that you both addressed here, because I think the majority of the folks that have joined us today are probably going to be entrepreneurs thinking of starting a business. Maybe they've moved it along. And so, Chad, you mentioned, that there's not real sound financials. It's projection based. And you said it is looking at the team. Peyvand, you also mentioned is looking at the team. Can you transfer some of your thoughts, your best practices, when an entrepreneur comes to either one of you seeking angel investment, around what are the ingredients of a good team, a good founder, and if you're welcome to use an example if you like. Maybe Peyvand will continue on that. Yeah,
absolutely. I guess when we started Axion in 2020, one of the things for us was to put structure and all of what we knew intuitively before an angel investment, to make sure that we structured and looking at how we can invest, or what is important basically in investment in early stage companies. I can say that our conclusion, we've done over 28 investments so far, and the team comes first on early stage companies. Still, we think that the team is most important, and the characteristics that we're looking on a team is are they having complementary skill sets that can take the company to the next level? Means you need to have a brilliant, let's talk about a tech company, a brilliant scientist that can take the product to the point that is acceptable by the market. You need to have a business development person that can take the business to the next level as well. And if it's complemented by an operation person that can take it, this would be a killer a combination for the company to go there. So if any of these elements is missing in the team, or sometimes there's some other dynamics that brings red flags for us, that these combination will take the company to the next level. because we need to understand that the companies will pivot. The idea will change throughout the lifetime of the investment that we had. What is important is if this combination of co-founders that we see can take this idea or initial idea to where the exit happens and where the ultimate market validation will happen.
Great. Thanks, Peyvand. Chad, I'll hand it over to you.
Yeah, I think Peyvand and I, see eye to eye on a lot of these issues, especially the team. I think that's I think it is, you can have an idea that's even just slightly less than great, but if you have a really great team together, you can make it work. You can pivot when needed. You can use networks to make it happen. And I think Peyvand is exactly right. If you're looking for red flags, and we've certainly seen this and passed on investments because of it, ask for the cap table. Find out really early on who owns what. And I would say one risk that I try to avoid is single founder companies. If everything pivots on just one person, I think it adds a degree of risk that I'm not comfortable with. I'd love to see 2 co-founders, maybe 3, but really sort of a team of co-founders rather than hinging on just one person. So if there was a flag there, that's one would it be. And when we do write term sheets and invest in companies, I think an important thing to do also is just make sure the company has a good governance structure. So good board, good, let investors have their input onto, what the company does with its capital, what it does with its share issues, and that sort of thing.
Yeah. Thanks, Chad. I think just to build on that, can you maybe expand the cap table analysis for the folks on the call? And I think it dovetails nicely with your last point around the governance and the share structure, but maybe walk people through how you would evaluate a cap table. And I guess there's red flags, and then there's red flags within the red flags within.
Yeah. And every cap table is going to be unique. What the ideal scenario is, and for those that don't know what a cap table is, it's basically just it's a list of people who own the company and how much they own. That's basically it. And as the company raises more capital, issues new shares, you get to see over time how that changes and who owns what percentage of the company. How to evaluate it? I mean, ideally, the company has a few shareholders. It's got the founders, and then it's got a couple of investors, hopefully with big stakes. Cap tables that become less attractive to me are ones that have a lot of different instruments on there. Say you have a convertible note, a safe, an equity issue with, you've already got 50 different investors. It becomes a little more complicated, and inevitably, as the company moves down there, there's probably going to be needed some sort of recap with the larger investor. But the simpler, the better would be the overall message.
Yeah, thank you. Peyvand, I'm going to put you a little bit on the spot here, building off the cap table and keeping that as clean as possible from an entrepreneur standpoint. But as the company scales, obviously the appeal of having a clean cap table, like Chad mentioned, is important. And wondering if you can expand a little bit on the genesis of the Axion fund. So I imagine part of it is the access to capital to be efficient for entrepreneurs, a little bit within the spirit of keeping a cap table cleaner. And and then there's a second, I'll let you answer that question. I have a follow-up.
So the reason for Axion, at least for me, was when I was doing angel investment by myself, I found that the investment decision making was efficient, but was not fast enough for the early stage companies. Being an entrepreneur all my life, I've lived through it, and I understand every week that passes by at the early stage companies is like years. And if you can't make decision fast enough to cut the check, you're changing the future of that company. It might be a fantastic company, but it's a cash burning machine based, and you need to be able to deal with it fast and efficient. So Ehsan Mirdamadi and I were co-founded Axion back in 2020. I guess we can blame it on COVID that we found a lot of time.
You're allowed to. That's permissible.
But we had this idea, and Inesan was talking about it for a couple of years, that we should start a fund, early stage fund. There is a missing piece in Ontario. There's not a lot of funds that they invest in intellectual property. The companies that they have intellectual property at their cores, and commercializing the intellectual property that is generated through publicly funded institutes, accelerator incubators, universities, and what have you. And there was an actual need, and the other part was, how can we make the angel investment more efficient and faster and structured? So that was the whole idea of creating Axion, and then meeting with investors from Northern Ontario. We saw a big opportunity in Northern Ontario as well, so we dedicated a bucket of our investment to Northern Ontario companies as well, and we were blessed with a lot of investment from Northern Ontario as well in Axion. So that was the genesis of Axion. Now I'll let you to ask the follow-on questions.
Yeah, I'm going to pivot from my follow-on. I'll get to that one later, because we do have a question about what excites you, what industries in Northern Ontario are appealing from an investing standpoint. And you just referenced the Northern Ontario thesis, if you will. That's unique in the Axion Fund, and it's certainly benefited our mutual clients. So maybe you can expand on that.
Absolutely. I guess the easy answer to that is always mining, and mining, we have the test ground for it, and there's a potential relatively fast market validation and getting pilots and what have you through what's available as far as testing in NORCAT or other center of excellence that exist in Northern Ontario. That part is a no-brainer. What was a pleasant surprise for me was the medtech and bioscience, that I think there is a good potential in Northern Ontario for it. Reason for that is market validation. Getting through hospital systems, if you are in Toronto, is very difficult, very cumbersome. And you have better access in Northern Ontario to very modern and up-to-date hospitals that you can validate your technology that you can make, and it's easier, faster, basically. So I think there's a potential that has not completely realized yet there, but that's another interesting part of Northern Ontario.
Yeah, I would agree fully around that. And Chad, maybe I'll get you to reflect on that. And obviously your role with OCI now, Ontario Centres of Innovation, big announcement at the AGM on Monday, where the province and that ministry is going to be really focusing on the life sciences sector, building on the infrastructure they put in Oven. Is now they've got a target on life sciences, and I feel Northern Ontario's got a great chance to continue to punch above its weight. So what are your thoughts on that?
I think the province has sort of been focused on OVIN, which is the Ontario Vehicle Innovation Network. I think there's been a lot of money spent in that area, which Northern Ontario is really well positioned, and I think that's how we need to think about mining as part of electronics, part of how we get to electric vehicles. And I think with the province sort of moving and focusing on life sciences now, that would be the other vertical, as Peyvand said, that I think Northern Ontario, I'll use Flowsonics as an example of it, a very successful company out of Sudbury that's not just doing well for Northern Ontario, it's doing well for, on a global basis. I think their last investment round is 20 million, 30 million US. And I think, it's an example of what can be done out of the North, and that we are positioned, whether it's electric vehicles or life sciences.
Yeah, thanks, Chad. Yeah, the Flowsonics example, I agree, is a good one. And that's a medical device company based out of Sudbury. And I don't have the permission to tell the story, but it's a fun one. I'll try and get it one of these days. But going back to the earlier comment of angel investing, I think it was really the appeal of putting an investment into that company was around the founders. really
Yeah.
excellent founding team. Three of them, we know them well, and they're demonstrating that that early foundational requirement for angel
Exactly.
investing. Yeah.
And that, you know, you can build a company out of Sudbury and have it be very successful. I think that's what we all need to remember as investors, that these companies can grow beyond your expectations.
Yeah, I agree. So that dovetails nicely into that question that I parked a while ago. And Peyvand, I think you were mentioning about the efficiency of the capital being deployed into the companies. And earlier you talked about the kind of the evaluation and where, you know, you've got your three founders and they're rounded out nicely, but maybe there's a missing element within the team to really execute and scale. So what do you think is the good hallmarks of an angel investor, and where they can step in, where they can guide, act as an angel, or maybe where they pull back? Just curious what you think are some of the foundational elements of a strong investor.
I think what's really important for early stage company is market validation. You know, we all can help them as far as, you know, how to pitch, how to present themselves, which is quite important. But what's most important and is crucial for early stage company is market validation. So leveraging our network as an angel investor to introduce to different markets. What they need is warm introductions or guidance as far as what we have as a background, what we know about the industry. There's a lot of theories that the founders, they come up, but doesn't mean that the market can bear or willing to pay what they've developed, or the fact that if this technology is a good to have or a must have for the industry that they're in. So as an angel investor, I think first of all, we need to be brutally honest with the founders and tell them the bad news first and fast if there is one. And secondly, genuinely, you know, the angel investor, the name is on it. You need to be an angel and introduce the company that you've invested in into your network and really help them to get to the next level and go out of your way to make that introduction, and that's the main thing for them. It's like having the very first pilot or purchase order will make a big difference as far as where the company goes.
Right. Chad?
Yeah, I honestly, I think I agree with everything Peyvand just said. I think for a good investor, these, like, I'll go back to what I said at the beginning of investing in big public companies. There's not much you can do as an individual to help them succeed. You're going to buy the stock and hopefully it goes up and that's it. This is not that. This is you know, not only are you going to have an impact if you're investing in Northern Ontario companies, but it's impact of what you can do for them. You could help make the investment happen. And I think that you have to be in that mindset of not just investing and going away. Hopefully it works out. I don't think it's a great attitude.
Yeah,
I want to add something to that, if I may, Ian. The other thing, because we're investing on early stage, we don't often talk about exit, but that's something that, and as an angel investor, you first of all, you need to set the mindset that you need to socialize and engineer your exit from early stage of the company. And secondly, we can help and facilitate that exit through our connections as well. So that's another very important part in my view.
Yeah, thank you. Chad, maybe be bad cop on this one around maybe some best practices that you would share with the investor community of things not to do that maybe you've seen, and I know this is very individual, but some just high level, what are some things that you've seen where you're like, ooh? Well,
I'd say, and I this is my philosophy. I think Peyvand shares this, but we don't want to. We are not trying to pull one over on the founders. I think there are a lot of aggressive, especially at VC level funds, that some of the practices some of the investments they make are in order to really depress valuations and buy as much stock and gain as much control as possible. I think my philosophy is that we want to get the best deal for investors, but at the same time, we want to produce the most out of the founding team. And if you crush them too much on terms and valuation, I think there's a balance that you have to find in terms of properly incentivizing the founders and doing the best by our limited partners. I think that balance is a good goal to set.
Okay, thank you. So we hear often when we have expressions of interest from entrepreneurs, and they're starting to understand the angel investing process. They go, "Well, I don't want to give up anything in my company." As investors, what's your response to that? And I don't know maybe Peyvand, if you wanted to tackle that one first.
My answer is 100% of 0 is 0.
Yeah, good math.
It's really, if it doesn't become a company if you don't give up equity or some sort of shares against investments. And you could create a lifestyle company, but it's not a growth company. What we're in as angel investors, and our target is growth companies. Remember, we put a small check in hope of having 20x, 50x return in a few years. We bear the risk of that early stage company to get to that point. If the founder is not willing to give shares against that then it shows that company is not going to be. It might be successful, it might generate cash, but it's not a target for angel investment.
Great. Chad, you're echoing Peyvand's.
If this business, I mean, a very successful business can grow at 20% a year, 30% a year. That's just not what we're after as investors. We're after, doubles and triples, not slow growth. So it's just that perspective that Peyvand just shared, I think is bang on.
Great. Can you expand on what those indicators are in that startup around that have that significant growth potential beyond Peyvand? You talked about market fit earlier, but some other things that you're looking at that will help in that evaluation. I guess
purely from market size is like, how big is the market? Does it make sense, basically, that the product fits the market? And then is the founders are the right people to capture that market or that addressable market that is there. What we're looking we usually look at the trends and what's available. Let's say last year, investment in early stage companies were significantly decreased. But if you were in clean tech, actually the investment grew last year. So that are they in the right trend, or if you had an AI company, the investment grew in that sector. So are you in the right trend? Is the market is big enough? And you have the team that can pull off that and capture that market. Yeah. I find that's really interesting. You mentioned AI, and of course the undercurrent of this whole conversation, really at that early evaluation, is the team that's come through everything. And yeah, I guess it's finding the right time and really if that trend is legitimate and there's longevity to that trend. Because I think we were all at Collision a couple of years ago, and it was you're beaten over the head with AI, and now there's so many varying opinions around it. Chad, do you want to build on that a little bit, or
on AI specifically?
Or the trend piece, you can pick on AI if you like, whatever.
Yeah, I always have 2 or 3 trends, sectors, high growth markets that I want to invest in. I think one of the ones recently for me was fertility. I've been looking for 2 or 3 years for our investment in fertility. So I have certain areas that I want to. I don't always find them, but there's certain areas of pockets of growth, and clean tech is another great example, where you're sort of going from more of a top-down sort of approach, but yeah, I think I think you can also do the opposite. Sometimes this is what we do with public companies a lot, is look for sectors that are hated, sectors that nobody likes. Otherwise, you're going to be paying too much. I think it happens less in angel investing in early stage, which is actually the nice part. You don't always have to pour over sectors that everyone hates, but I think you can go both ways.
Great. I don't want to get you in too much trouble today, Chad, but can you think of a sector that isn't hot right now that people are hating? Just curious your perspective.
No, I have one absolutely in mind, and that's genetics. I think the sort of dismantling of 23andMe is will hopefully be a bottom in what I think will be the sort of next phase in how genetics are used in precision medicine. Genetics has had a 10-year terrible run. There's Invitae, one of the other big companies in the space, is basically at zero. And I think the way we rolled it out as a sort of a retail product that didn't tell people all that much was largely a mistake. But the information that we can gather from genetics and the whole precision medicine category is something I'm very interested in. And I'm hoping we're forming a bottom in genetics.
Okay, very cool. I think we should highlight that we're proud of a precision medicine company out of Sudbury, RNA Diagnostics.
Yes, yeah.
That's another nice example that we can share with the community. So you're talking about life sciences there. We talked earlier about the I don't want to say the pivot, but the concentration in investments that the province is going to put into life sciences. Chad, you talked about fertility, specifically in Northern Ontario in that life sciences sphere. Peyvand, you were a bit surprised around some of the strengths that we've exhibited. Radialis out in Thunder Bay, for instance. What do you think the opportunity to grow at that life sciences sector in Northern Ontario is to support those investments in the rest of the province, rather?
Should I go first?
Sure.
I think the life science requires some complementary skills that we need to develop it around Northern Ontario as well. It's like having complementary organizations that can help on certification of devices or products, basically, and a lot of compliance. Having people that they do understand all the rules and regulations. Like all of the companies that we developed beside the Canadian market, we look at the US for growth. So we need to have people that they have that kind of skill set, how medtech or bioscience works in US. I know Chad is always asking about reimbursement codes or
Yeah.
It's like those are major obstacles for the growth of the company to get to that unicorn level that we're all looking for. And if we want to create a hub in Northern Ontario, we need to have all of these experts around the table that can help these companies get to that point. How do you expand in hospitals or home care system, wherever you want to go? One market is Canada. We need to have experts by the US market as well in our group.
Yeah. Wonderful. Chad?
Yeah, no, I think just to build on that, we as a province, we as a country, we as a province need to, and this is a big ask, I realize that, but if Ontario is serious about life sciences, then we have to be a place of innovation. Our health network on our insurance plan, we have to support the companies that are built here, because right now the way we're investing is we're developing the product here. First market is always going to be the US. And I think Ontario should be, through its network of hospitals and academic institutions, I think we could do a much better job of supporting our young companies in terms of whether it's support in clinical trials, whether it's sort of pilots, that type of thing. But I think, if you want to make the marketing, talk about Northern Ontario, there are some really top-notch facilities that I think could help their own companies with not necessarily funding, but really just helping their product along and help them navigate, some of the regulatory, landscapes.
Great. Yeah, thank you. I have one final question here. We're going to pivot back to the investor lens, and we've heard for some of the new investors that we've attracted to the network, I've had this question where, if I put my money into this, when am I getting my money back? And you have a mutual colleague who I won't name right now, who I've heard him respond by saying, "You won't." I'll let you guess, so that you can
I know who
text
that
me out.
is.
Yeah, and I like that approach. But some people think you should only play with 10% of your investment portfolio. There's a whole bunch of different approaches out there. But when you're inviting somebody from your network to participate as an investor, what are some transfers to the knowledge, and how do you engage with them and to manage expectations around this whole investment process? Chad, you just hung.
Okay. Yeah. Well, it's a long horizon. I wouldn't make just one investment. I think I would say typically with a fund, your time horizon, I think, has got to be sort of 7 to 10 years. I know that sounds like a long time, but I think that's just realistic. And I think my job, Peyvand's job as fund managers or people who are, in charge of other people's money, is to help facilitate those exits, not to wait around, to help companies exit and find more creative ways of providing liquidity for investors down the road. You don't necessarily have to wait till the company is sold or IPOs, but finding creative ways to get liquidity. And by that, I just mean being able to sell your shares to another investor before there's an exit. I think that's a job of a good fund manager too. But yeah, it's a long horizon, and that's the way it goes.
Yeah. Peyvand?
It's just educating yourself. What's the nature of the investment? How long does it take? I agree with Chad as far as considering 7 to 10 years, and what Chad brought up is quite important. And there's a whole bunch of secondary exits available to angel investors that they don't need to stay until the ultimate IPO or acquisition of the company. But what I want to add is the data. There is now, we in Ontario, we're mature enough as far as angel investment that we have 10-year data. And I strongly recommend for angel investors to go and read it and see what is the return on investment average for 10 years of angel investment, what was the exit look like, and what have you. And what we learned basically in Axion to mitigate this risk and based on individual experience that we had, but we need to consider that this is a high risk, high reward investment. There is plenty of fantastic examples that you can read and understand how people made 100x on their investments and what have you. But the data doesn't lie. It's an average of 10 years investment across angels and what have you. That I think it's crucial to set the expectation of angel investment from onset of investment.
Yeah, wonderful. Peyvand, can I ask you to expand on maybe where people can look at finding that Ontario-based data? I know we connect in with the National Angel Capital Organization. They've got good historical data in Ontario. It's the Angel Investors Ontario. Any other resources that they could?
It's some of the older angel groups. They publish their data as well. You can get the data of GTAN, let's say, for the past 10 years. That's a good source.
Yep.
Out of Waterloo, and as you mentioned, the Ontario basically angels, they do have historical data as well.
Yeah, wonderful. I've sped through a number of my questions, and I think we'll open it up to the floor. So you can raise your hand if you have questions to Chad or Peyvand, and we also have the chat feature. We've obviously covered a lot, and this is the tip of the iceberg into this realm, but feel free to chuck some questions into the chat or raise your hand while we have a little bit of time left here. Oh, letting these guys off the hook.
Can I ask a question or two from some of the questions that were asked during registration in relation to
Sure.
investors? Okay, perfect. So thank you both. That was a wonderful presentation. So one of the questions that came through is how important is ESG for investors today? And if you could maybe elaborate a little bit on that part.
Well, I can add because I'm actively raising a clean tech company now. It is quite important. We have actually a huge now community of investors that specifically want to make an impact. We all like to have a good ROI on our investment, but these days are getting more and more important because we can see firsthand the effect of global warming around us, so it's quite important. And unfortunately, we had, I don't know if you guys remember or not, but we had the first wave of clean tech investment in the 2000 to 2010, which was not successful, and it created a lot of negativity back in San Francisco and also in Boston area. But the investors that they started right around 2012 or 2013, we have multi-billion funds now that they're specifically working on ESG, and it's getting more and more money is allocated to that. Every time you talk to large corporations, they have venture funds now available to it, and these are reason that I'm bringing up because these are complement for the companies that we're investing as angels, and they need those venture VCs to come in Series A or Series B to take them to the next level.
Perfect. Thank you so much.
Natasha, did you have a follow-up question? I think you might have had a couple there. Sorry, putting you on the spot.
There is another one that's coming in here. We kind of spoke about it a little bit during the conversation though, but if you could pinpoint one or two things that you look for during a pitch, as well as during due diligence process, that would be really great. I know that we're going to be talking about pitches in the next session, but from an investor standpoint, what are the one or two kind of key pieces that you're looking for on those two items?
Chad, would you like to take that?
Yeah, sure. On a pitch, the pitch is like the first impression, let's call it. I think what I look for, and I think what's really important is simplicity. If you can get your message out in 5-6 slides, and I don't have to leave the meeting wondering what exactly this company does or who's involved, that's really important. I think a 40-page slide deck and a presentation that's not concise really, I think is not the way to go. I think simplicity, a good message, is I love it when you give someone 10 minutes or 15 minutes and they're done in 7. I also really appreciate the ability to interrupt and ask questions during the presentation, not to have to wait to the end. I think you want to see an entrepreneur be able to handle questions in the middle. I think the other question was around DD. For me, and I think any good diligence work, I think one of the most important parts is like stakeholder diligence, being able to talk to people around the company, make sure they care and they're invested, but also, talk to customers, talk to people that have done business with the founders or people that are sort of in and around the company. I think it's important to get perspective from people that aren't the founders. I think you have to get perspective from outside the company.
Thank you so much, Chad.
Peyvand, do you want to add anything to that, or?
Yeah, no, the pitch, as Chad mentioned, is first impression is important, but it's not that important basically for us. The pitch needs to just pass the message, not having like big mistakes. Some of the mistakes are big, like if one of our founders comes and say, I don't have any competitor, or there's some red flags that we see that, okay, it shows that the founder does not have the experience to pitch. Or sometimes, you know, we see some valuations pre-revenue that again shows that there is no experience on that, and some red flags like that. That is not often you see these days. There's so many resources on pitch that founders are really come prepared for the pitch. But on the due diligence side, talking to the customer and see if there is a really market fit there is it's very, very important. And also talking, there's some other red flags that you know we pick up during the due diligence, and Chad and I, we usually have 2-3 interviews with different stakeholders, and then you pick up on the dynamics between the founders, or stuff that can create problem further on into this, and who's doing what. Does it make sense, the partnership that created? Does the founder has enough equity in the business that keeps him or her motivated to the end? And so those are more important in further along than just in initial pitch.
That's great. I might add a little bit to the pitch part. Chad, you shared something with me that kind of inverted the pitch process. And Peyvand, you mentioned there's so many resources out there. There's a real formula of how to do an effective pitch. Chad, you mentioned to me within the last year that you liked where the ask was right at the beginning.
Yeah, I might be alone in that. I don't know. I mean, I don't think I'm
No,
alone.
I'm with you. I'm with you.
Yeah,
there's two of us.
I really like to be able to get the stage of the company right away, so that I'm not wondering the entire presentation, and we get done and they need $100 million, and I'm like, well, this is not. You're talking to the wrong guy. I like to make sure that I'm not wasting their time as well. And so if I know how much capital they're asking for, under what sort of basic terms, it's really helpful, so I'm not distracted for the rest of the presentation. And that's how it works on Wall Street. You basically, the banker will go to a meeting investor. Here are the guys, here are the terms, this is when we're looking to close. Okay, go do your meeting.
Yeah, I've really liked that. And the other thing that you talked about in the presentation, and again, there's a formula how to do an effective pitch. I love the ability to have a conversation throughout it. And yeah, just to me, it's more inviting, and you get and I think you get a real sense of who the founders are through that engagement. And I know sometimes time is limited, so they have to perfect that 5-minute pitch, but the ability to just have a conversation, I think, is really really beneficial for all parties.
Yeah, I think it puts the founders at ease too when you're looking to have a conversation rather than a formal presentation. I generally think it goes better that way.
Yeah, we do have a question that came in on the chat. Michael, apologizing for coming in a bit late, and yes, we'll have a recording, Michael. He had one question: what practical strategy should an angel investor have different from what a VC does? Most information out there is around VC GPs, and he has seldom come across angel investing practices.
I think I can answer that. You got to be able to sell this to a VC, most likely. And I mean, the idea, you're almost investing at a level where you're preparing it for a VC. So I think you need to understand how VCs operate, how they think about investing. And I think you need to always have the mindset that you're looking to eventually sell this idea to a VC that can take it to the next level with a much bigger check.
But if I may say, on what the difference basically, and the difference is you know what Chad alluded to first, like as an angel investor, you need to think what's going to happen on the next round. So if you be super aggressive and on the valuation, on the rights that you want to take, you're basically impeding the growth of the company that you're investing in the next stage. So understanding what the VCs and PEs in future they ask and they want, it's very important at the beginning, because angels at the beginning, they have a lot of power over the company because they're the first check. But understanding what's going to happen in the next series, it helps your own investment. And the founders need to be motivated and need to have wiggle room in the next rounds to be able to grow, negotiate with VCs and larger funds later on.
Thank you. The second question that Michael has here, I'll pose to Peyvand, is how can an angel investor apply the power law, invest in lots of promising startups with just a capital allocation of $50,000 to $100,000 a year?
Well, you need to join an angel fund.
There you go. There was your softball for the day.
That's the whole idea of being an early stage fund, basically. So you can have small shares in different companies and allocate, because usually the investment with the, let's say, 100K per year, the unwritten law is your check size, minimum check size, 25K in Ontario. Don't go below that. And so you can have maximum for investment. But if you want to diversify beyond that, then joining a fund like ours would help.
Yeah, wonderful. Chad, do you want to bookmark that in that one?
I just will add one thing, that a fund like Axion it's not like, I put it this way: if you put money into a VC, you're not going to really get a whole lot of input or insight into what they're up to until you get your quarterly letter. Axion, you can attend the meetings, the select committee meetings as an LP, you can attend, and you can feel more part of the process. So you don't actually miss that part. It's a way to sort of get the best of both worlds.
Wonderful. If I could maybe jump in from the Northern Ontario Angels perspective, you know, a lot of our deals minimum check size would fall in that 25 to 50 range. We've started to see more where it's 100,000 based on the type of company. And one thing that we're exploring is to attract new investors into deals, and to protect our entrepreneurs is to look at special purpose vehicles. Where you could distribute a little bit more money, and that manages the cap table as well. So you have one entity that lives on the cap table, but you can have multiple people putting different levels of investment into it. And so we're looking at ways that we can do that to entice new investors. And again, like I said, to help our entrepreneurs keep things clean as they grow and scale. This is wonderful, Peyvand. Thank you for joining us from across the Atlantic. Chad, thanks for joining us from Parry Sound. But
yeah,
really appreciate everyone's time and transferring the knowledge. This is being recorded, and I think the team will be sending it out. So I'll hand it over to my colleagues to formally close things down. But thanks so much.
Thank you.
Thanks everyone for participating. Visit the Eventbrite page to register for our last session, which will be next Thursday, where Ian and Matt will be presenting on being pitch ready. Thank you. Merci, miigwech.